You might have filed the GST returns properly, but still your input tax credit can go wrong. What is the reason? This shows the importance of filing the or reconciling the inward supplies and outward supplies details properly. Then only the ITC you can claim the correct credit for that. So let us look into these details in this module. So what are outward supplies? Outward supplies are our sales of goods and services. This is reported in GSTR 1. So this will show all the details. That is tax invoice, debit note, credit note, the code number for goods and services, HSN for goods and SAC for services. So these details, all the details, the sales value, everything will be clearly indicated in GSTR 1. Suppose if you are making a mistake in GSTR 1, there is a provision GSTR 1A you can make use of for correcting the same. Usually taxpayers may make mistake in classifying the using the different code for goods and services. This can be corrected using GSTR 1A. Now two types of payment returns filing. Either taxpayers, regular taxpayers, they will file monthly or they will file quarterly. For those who are filing monthly, 11th of the next month they have to file, and those who are filing quarterly, 13th of the following month after the quarter, they have to file their returns. That is quarterly, those who are filing, they are following the QRMP scheme, quarterly return filing and monthly payment. Now coming to the purchases, that is the inward supplies. Inward supplies is our purchases. So we are paying GST for that. This will be reflected in GSTR 2A and 2B. GSTR 2A is a dynamic statement where the suppliers keep loading the data according to your purchases. Whereas GSTR 2B is a static statement. That is, it will reflect the correct value. So this is GSTR 2B is report, or they are taking that return on the 14th of every month. So this, its importance is that outward supplies and inward supplies should be properly matched. It should be correct. Then only you can claim the correct ITC. So even if you are filing the correct tax returns, your ITC can go wrong with this reason. Let me clearly explain with the help of an example. You bought raw materials worth 1 lakh and you have paid GST 18%, that is rupees 18,000. You have reported GST paid 18,000 in your books of accounts. In your information you have provided that, but the supplier has not informed properly. He has not included that in his returns or his information. This information he has not loaded. So what we have to do, we have to contact the supplier and we have to tell him to correct it. Then only we can claim the correct ITC. See, GSTN portal itself is telling the taxpayers to correct the statements, match your sales with your purchases. The value should match. Then only you can claim the correct ITC. So it's important you have to match the outward supplies information and inward supplies information. Then only you can claim the correct ITC.